Mortgage rates are rising fast as inflation fears shake the market. If you're buying or refinancing, you need to know what this means now. Mortgage rates have climbed in recent weeks as inflation worries increase. According to Florida Realtors, this rise is driven by investors demanding higher returns to offset inflation risks. For example, the average 30-year fixed mortgage rate has edged up by nearly half a percentage point recently. This increase directly raises monthly payments for new homebuyers and those refinancing existing loans. The market is reacting quickly to inflation data that suggests prices for goods and services will keep rising, pushing lenders to adjust rates upward. The groups feeling the impact most are first-time homebuyers and homeowners seeking to refinance. As mortgage rates rise, the cost of borrowing goes up, which can reduce purchasing power or increase monthly payments significantly. Florida Realtors note that this trend could slow down the housing market, especially in price-sensitive regions. Buyers may find themselves priced out or forced to accept less favorable loan terms. Refinancers hoping to lower their rates might miss the opportunity if rates continue climbing. Inflation worries stem from persistent supply chain disruptions and rising energy costs. These factors increase the general price levels in the economy. Investors anticipate that inflation will remain elevated, making fixed-income assets like mortgage-backed securities less attractive unless rates increase. This dynamic pushes mortgage rates higher. Florida Realtors highlight that inflation expectations are key drivers behind current mortgage market volatility, indicating that rates could keep climbing if inflation data doesn't improve. Looking ahead, if inflation remains high or worsens, mortgage rates are likely to continue their upward trend. This means homebuyers will face higher borrowing costs, potentially slowing down home sales and refinancing activity. Florida Realtors suggest that buyers should act sooner rather than later if they want to lock in rates before further increases. However, if inflation eases, rates could stabilize or even drop, offering relief. The market is closely watching inflation reports and Federal Reserve signals for clues. If you're planning to buy or refinance, consider locking in your mortgage rate early to avoid paying more later. Budget for slightly higher monthly payments than you might have expected and avoid stretching your finances too thin. Stay informed about inflation trends and housing market updates from trusted sources like Florida Realtors. Being proactive can help you navigate these rising rates without jeopardizing your financial goals. Rising mortgage rates driven by inflation worries mean you could pay more for your home loan right now. Whether buying or refinancing, acting fast and planning ahead is crucial. Subscribe for daily updates so you're never caught off guard by market shifts.